Hi, and welcome to this installment of our Industry Leadership Series. I'm Brian Dobson, Head of Disruptive Technology Equity Research at Chardan Capital Markets. And as always, I'll start the call with some important disclosures. Our compliance team has asked me to read this statement for the investor call. By participating in this call, our speakers attest that they have not made Chardan aware of any potential conflicts, and they will not discuss any material, non-public, or confidential information that they are aware of that may breach their legal, regulatory, or fiduciary responsibilities to any parties. So that out of the way, it is my pleasure to introduce Krishna Gupta, Interim CEO of Presto Automation. We recently launched coverage of the company, and our research is available upon request. Thank you so much for joining us this morning.
Thanks so much for having me, Brian. And Chardan has been a great partner to our firm and to our company, and so I'm excited to be here today with you.
Yes, of course. So first things first, the stock has been very volatile this week. It certainly ran quite dramatically on Monday and has come in a bit since then. We understand that a group of retail investors has taken an interest in the name. Would you care to elaborate on your interaction with that group, or any further interaction with that group that you may have?
No, I mean, I think what's happened is fairly straightforward, which is, first of all, we do live in a world where retail investors matter, and I think it's important to acknowledge that. I certainly don't have the approach of, hey, institutional investors are the only ones that matter. Retail does drive, performance over time as well. And I think our story is uniquely suited for retail. And the reason for that is twofold. One is, the AI boom and the sort of very accessible nature of the AI story across the world, frankly, has meant that retail investor groups have been looking for AI micro stocks, micro caps to sort of come into. Now, I'll acknowledge that many of these guys are looking for short-term wins, but over the last couple of weeks, from what I gather, they've been looking for their, sequentially the next big AI microcap stock to come into. And I think over the weekend, some of them decided that that was going to be Presto. And then the other reason why our story is very accessible to retail is just the fact that we are automating drive-throughs, and drive-throughs are a fixture across this country, and frankly, are accessible to everyone. And so that makes our story compelling for retail. It's very much a here and now sort of opportunity. And I think for that reason, forces collided. I've had some interactions with these retail investors as the stock started going up. I was curious myself, and so, but yeah, I think it's what it really demonstrates, and I think what institutional investors need to take away from this is that now we are a name, a company, a stock that is going to be watched and followed and tracked by a large group of people. And as and when there's fundamental driven news and growth, we're going to see a lot of volume come into the stock. So that just makes it a much more liquid stock than it was before.
Yeah, I agree with your sentiment that the retail is an important component of an investor base, particularly at this market cap. That said, and you have had some interaction with at least this particular group of investors, do you envision yourself going on the road to meet with, call it, high net worth individuals or wealth management groups to call it, try to court retail investors?
Well, yeah, I mean, what I would classify as retail is a little bit different than high net worths and wealth management. I would absolutely, welcome an opportunity if there's wealth management groups that would like to hear our story. I am very much a man of the people, so to speak. I'm happy to carve out time and share our story. My objective is very simple. I want more people to know about our story. But the retail I was referring to is really is the opposite of necessarily high net worth or ultra high net worth. It's your average sort of probably middle class person across America who has decided that the equity markets are going to be a source of wealth creation, which they have been in this country for decades. And now, given that there's much higher information flow and ability to understand, ideas and trends and technology, they are starting to take positions. Now, from my perspective, I really am only interested in the ones who are long-term investors. So that's a distinction I would draw. I'm not interested in short-term swings here and there, although they do create volume. We're looking for partners who believe in our company.
Yeah, and that could be appropriate for that type of investor, so long as risk profiles are aligned with the risk profile of the company. So I guess departing from that, what do you see as the global mega trends that are shaping the sector over the next few years, and how are you positioning Presto to prosper in that environment? I think that's a question that we try to ask to all of our management teams, just to really frame their macro view.
Yeah, well, I think if you look at macro, there's a few trends that are important. One is, the cost of labor is always unidirectional, right? It goes up, and it has taken a real swing up. And so I think that has led to, frankly, a lot of labor-reliant industries, not just restaurants, to say, how can we do more with less? / how do we automate? And so the first might be augmentation, the second would be automation. And I think that creates a real opportunity for technologies like ours and technology companies like ours to just gain very wide adoption very quickly, right? So I don't see our drive-through voice AI being a 10-year play here. I mean, I always like to ask people the question, in 3 years' time, do you think there's going to be humans taking your orders in the drive-thrus? And I think, given what's happened in the last 3-4 months with the AI boom, I think the answer universally that I've heard, at least, is no. And so that's one trend is labor automation. The other one is on the technology side, which is that that the sort of evolution and the development of, let's call them, artificial intelligence tools, although a lot of these actually qualify under machine learning and advanced machine learning, is moving very quickly. And as awareness grows, more capital will flow into this. And while it's clearly a bubble of some sorts, I do think that there's some fundamental sort of value that is now going to persist and actually increase pretty rapidly. So what that means for us is, how can we, get our voice AI to be better and better and better, to the point where truly it is, completely reactive, conversational, human-like, and can understand the other person's sentiments or desires perfectly, so that, if we just make it very simple, I drive up, it knows exactly who I am, it knows what I want at that moment in time, and it delivers to me a product that I didn't even really know I would want. But I walk away feeling incredibly happy that I bought it. So I think the development of AI and the advancement of AI is another mega trend that is not going to stop. And then, from the restaurant sort of consumer and the restaurant standpoint, I think, we are a society that, likes to be on the go. And so, the drive-through is an important part of any restaurant chain strategy right now, because they're seeing it's a very good channel for them. It's a great channel for consumers. They want to be able, but there's things that consumers care about a lot, which is efficiency, accuracy. People don't expect their orders to be as wrong anymore. And so when you're living in a world where consumer expectations are heightened in terms of how fast and how accurate their orders are, the drive-through actually makes a lot of sense. As a result, the chains are spending a lot of time and energy trying to figure out how do we increase what we get out of the investment in drive-through. Does that answer your question, Brian?
Yes, it does. I suppose, as you're thinking about your competitors, who do you most liken yourself to? Who do you think are your key competitors in the sector?
Well, I think, competitors are, we have some small startups that are private, and, there is some interest there in terms of, they want to sort of be a player in these spaces, but we haven't really seen them compete very effectively. And quite simply, a restaurant chain is not really going to entertain a 7-10 person startup all that seriously when it comes to rolling out their technology nationwide. And so, our edge there is not just the technology, where our voice AI team is actually larger than most of these companies' entire headcounts combined, right? But it's also the fact that we know how to implement, sort of integrate in the restaurant backends, POS, loyalty. We know how to implement this, we know how to sell it to corporate and then sell it to the franchisees and regionalize it. So that's one set, and then you've got a couple of other bigger companies, like you have a SoundHound or someone who's saying, well, we've got some voice AI stuff, and the markets we were chasing don't really seem that attractive anymore. So why don't we try to go after the drive-through, which is an obviously big market now, but they don't have any restaurant experience, and I think building that from scratch is really, really hard. So I don't worry a lot about competition. I worry about just solving the most important problem for my customers in the best possible way. And I think as long as we stay true to that, we'll be creating magical experiences for our customers, our shareholders, and our colleagues alike.
Yeah, very good. You touched upon there about the firm's experience in the restaurant space. You're new to the role as CEO, the interim CEO. Could you speak a little bit about your past experience and where you're looking to drive Presto over the next few years?
Yeah, it's a great question. So my experience with Presto is actually very, very long, and I was the first investor in the company, so I basically put it in business and effectively was a co-founder of the business alongside our founder, Raj. And I've been with the company since then, very actively involved in everything from the commercial side, the product strategy, the capital markets. So it was actually very natural for me to step in at this point, especially I was also I'm the largest shareholder and the chairman of the board. So that's my experience with Presto. But my experience outside of Presto is that I run a venture capital firm called Remus Capital. We invest in enterprise AI businesses, and then we invest in healthcare. And so on the enterprise AI side, and especially on how we think about implementing these new technologies in specific verticals, I have a lot of experience in vertical technology, whether that's restaurants here or healthcare, agriculture, retail, or construction. So, and in fact, I have a person on my team who's focused on food and restaurant technology. So we see a lot of interesting companies coming through our doors, which range from computer vision for pizza and accuracy to a robotic French fry maker to all kinds of things. And so I think that all comes to bear in terms of here I am. I definitely understand technology and innovation in a very, very deep way. So I have that founder like energy, but also we understand how to drive enterprise sales and connectivity and growth, and that's very important for the task at hand.
Speaking of robotic fry cooks and burger flippers, how far away do you think, or how far in the future do you think we'll see, call it a humanless fast food restaurant, from the AI-driven drive-through to the food being prepared? How far away do you think that might be?
I think it's still a few years away. The food automation is not an easy thing to do. I don't think it's like 20 years away, but I think sometime over the next 5-10 years, we'll see that it happens. If you talk to the restaurant customers, they are trialing some of this. So you've got the burger flipping robots or whatnot. So you've got some of that. But if you think about how basic and simple of a task that is, and then you sort of look from that to saying, let me actually assemble, whatever, a meal, and then put things together. It'll be several years, I think, before that actually, comes in and makes it happen. Yeah.
So, you have a legacy touch business. You have this exciting voice AI business. As you're looking forward, where do you see the majority of management's resources being allocated, and what do you think will be the key growth driver of revenues?
Well, look, I think our touch business is very compelling. We have some great customers there: Red Lobster, Chili's, Applebee's, and we absolutely intend to continue growing that. However, the marginal dollar that beyond that we're looking to invest, we absolutely see a land grab opportunity on the voice AI side. And so, my vision is on the touch side, can we unlock this amazing product that we've built to as many customers as we can? But on the voice side, it is, can we just automate every drive-through in this country over the next 3 years? It's as simple as that. How do we make that happen? And if we do that, we're probably a multi-billion-dollar market cap company if we successfully achieve that vision. So I think it's single-minded in that sense, and the customers are ready, and so it's just a question of execution.
Yeah, and speaking of execution, rolling out voice AI, you have many, call it, key investors and stakeholders operating in close proximity with the business. How do you see them playing a role in bringing in new business moving forward?
Well, and perhaps the one that's most important to call out is the group that led our PIPE round, and that's Cleveland Avenue. They are friends of mine from a long time ago. We're actually in another deal together, and they're very helpful. They're run by the ex-CEO of McDonald's. And so, as you can imagine, a lot of their relationships are relevant to us, and we spend a lot of time with them. I'm here in Chicago right now visiting my mother, but since I was here, I actually had lunch with the Cleveland Avenue guys yesterday. And so, yeah, there's a lot of opportunity to leverage those industry relationships. And then we have a lot of advisors around the table too. I mean, one of our investors is Greg Flynn, who is the largest franchisor in the country across many brands. He's been a very early partner of ours with Applebee's. We have a lot of people around the table that are relevant and helpful to the business.
Yeah, excellent. And how are your voice installations trending, I guess, and what do those returns look like for the customer? What kind of margin enhancement can they expect at property level?
Yeah, the installations are going well. We're rolling it out in a very steady fashion, and especially, we signed Del Taco. That's going to continue as well. And as we sign more logos, we're just going to right now we're just trying to make sure we have enough sales and implementation people to keep up with the sort of pace on the commercial side. In terms of what was the other part of the question? Sorry.
It was what do the returns look like?
Oh, yes, the margin, yes.
Yeah, in terms of upsell and labor savings.
Yeah, so the ROI for customers is pretty simple, and it's broken really into two things. One is the labor side. And the labor side, you can imagine entirely replacing a full-time employee, and that's an obvious sort of labor savings. And then on the other, or you could say, hey, you know what, I'm going to have this employee redirect his or her energies to a higher value task, which ensures higher order accuracy or something like that. On the other side, you have upsells, which we get very excited about, because if you look at the status quo of a human upselling, they don't really have skin in the game. A minimum wage employee is probably not going to, in fact, not probably, is not upselling people consistently. Yeah. And so, whereas you look at our product, we can upsell them. The objective there is get to the point where we're driving the perfect upsell every single time, which is personalized, which is time of day, which is whatever, right? Weather and this, that. It's Krishna. He wants a big chocolate brownie. So whatever it is, I think the delta between the status quo and where we can get to is massive. Today, we're seeing 5 to 6% uplift in revenue from the upsells. So net, I mean, I think we haven't really released detailed numbers, but I think we could easily see a margin improvement that's double digit, and in terms of a relative basis, and that's huge for these restaurants.
Double digit increase, not in terms of percentage point gain, right?
Relative, double digit percent, increase in margin.
Yeah, excellent. So I guess you previously targeted some, aggressive cost cuttings. I think about $15 million. How is that progressing?
Yeah, it's progressing well. We take costs very seriously, as any good operator would in this environment. Well, I would argue in any environment. And so, but certainly in an environment where cost of capital is much higher. I think, we're also careful, however, not to cut so deep that we're losing sight of the fact that we have this massive market opportunity that I elucidated earlier right in front of us. And so we're striking that balance, and I think we're doing a good job of it.
Yeah, excellent. And finally, you had, well, not finally, but I guess the next question, the prior management had previously alluded to a $100 million ARR break-even rate. Could you expand upon that a little bit and walk us through your thought process there?
Yeah, I think, I think it's going to end up being a little bit lower than that, but partially because we're cutting costs. And so we should be, but it's as simple as that, right? In any growth stage technology business, you're going to see a little bit of a J curve, right? And so you're investing behind growth. Like right now, if somebody tells me, we've got all these customers, I need to hire another 1 or 2 people to make sure we can implement them or sell to them properly. I mean, I'm going to say, yeah, it's a worthwhile investment, right? But at some point, you sort of see the unit economics kicking in and driving cash back to the bottom line, and you hit break even. So, our estimate, Raj had definitely gotten $100 million, $100 million ARR as kind of the rough break even, which is, by the way, doesn't take much, right? It probably takes 2 or 3 customers rolled out, of our pipeline, and suddenly you're at break even. So that's, and I actually think it's going to be lower than 100 million ARR. Yeah. So I think it's actually very interesting. And despite us being a growth stage business, we have a line of sight pretty clearly to getting to break even.
Yeah. I think that this has been an excellent use of time. I found the conversation very, very enlightening about the business. If you could leave investors with one final thought, what would it be about the company, about the future of the technology? What do you want investors to take away from this?
If you believe in applied AI, this is one of the most immediately actionable and scalable applications of generative AI in the enterprise. It's very rare in my career as a venture capitalist and as an operator to see a situation where you have the technology, the market, the macro, the micro, all line up exactly in one place. And that's what we have right now at Presto. So it's literally just an execution game. And, we'd love to have you along for the ride.
Excellent. Thank you. So with that, I'd like to thank you for your time and invite you back to chat with us again soon.
Really a pleasure. Always enjoying spending the time with you, Brian, and your team. Thanks for having me.
The feeling is mutual. Thank you very much.